Friday, May 5th, market analysis, Stan Ehrlich. And we got some interesting stuff for you today and in the near future, of course. So I always start out with the stock market indexes, the S&P 500 typically, and again today. We have what I call a pseudo island bottom. They are very rare. Probably one or maybe a half of us, one every 2 years, do I see these, in particular in the major indexes. Let me explain. The market gapped down a little bit yesterday and left a gap behind. So I'm expecting the market to come back sooner or later and trade in that price range between yesterday's high and the day earlier's low. But this morning, we opened above that gap from yesterday, isolating like an island all of yesterday's activity under the gap. Let's take a look at the daily chart for a second. And zooming in on that, this is yesterday right here, 5/4 is the date. We gap down. It's not a real big gap, but the gap is a gap. Now, yes, gaps are almost always closed. And I've showed you this many, many times in the months that I've been doing the YouTube. But islands stay islands. Usually, it's a violent market type of a turn. It traps people that got short or bearish yesterday, expecting downside follow through. All of a sudden, they've got a loss. Everybody that went short yesterday's got a loss, and it gets very bad very quickly, which it did. On the left is your 5-minute, 1-minute chart. It opened and started popping up with the usual stall for a few minutes and minor retracements again and again and again. We are right now 6 points higher in the day and not even at the high, although it's coming up a little. The high of the day at 1170-ish, 1165, 411.65 is not but 50 cents away. Very close. It's 10 o'clock California time. There's 3 hours until a close. This is only the middle of the day. There is plenty of time, if it will, to make new highs and follow through upwards. There's one more gap above the market, remember, to try to close here. I've talked about for quite a long time, around 415 and a few ticks on a spider. You can see it on the daily data chart on the right. And if we close that gap, we'll have a lot of upside momentum. We will probably not be overbought at the time because we're already halfway there if you look between the two different gaps. This gap down below caused the island bottom yesterday. That could be the beginning of a very strong move into new high ground for many months. And I do think there's a distinct, and I'll use the word probability, that that's the case. Ask me in a couple of weeks. So I'm looking for a rally to come up and close the gap and not stop. I'm looking for this rally, and obviously it's going to be pretty much next week, maybe some more today, to be really profound. What I don't want is for the market to close below yesterday's low. Now, that's a bit of a dip, not all that big a deal. Currently, we're 1120, 411.20. Yesterday's low was a little under 404. So it's a big down day, but you can get down to yesterday's lows pretty quickly. So that's the bad part, but I will turn bearish. Remember, there's still that damn gap at 397, 396. That's never going to go away. The question is, will it ever get closed? And it looks as of now like maybe the word never is the appropriate word, or so far away in time that it doesn't matter. Okay, excellent, very bullish. Do we have corroborating information on the other indexes? Well, stay tuned for about 1 second. Here's the DIA chart. It came down yesterday and closed actually very small amount of a gap that was created at the end of March. And the second part of it was March 30, March 31. There was a gap. Yesterday's low closed some of the gap. It's very small to begin with, but there's still a tiny bit left. But that's the effort. I think I even mentioned that yesterday, to close a gap, and it's gone. That's it. Gaps are almost always closed. I always use that word almost, always. It's a very high percent of the time, something like 80, maybe even 80 plus percent. So they are a relative, well, I'm not going to say that. They're a great charting formation to make use of. Now we have this other gap, and it is in the DIA this morning. It gapped up above the high of yesterday, which was below the low of the previous day. You have another island or pseudo island bottom. I think in the textbooks you find, and I'm in about 20 of those damn books, you'll find most examples of island tops and island bottoms being the high day for a major move up and the low day for an island bottom, of course, at the bottom of a major move down, meaning large amounts and a substantial amount of time involved. This is the reason I use the word pseudo, because it fits the bill for all practical purposes, but this is nowhere near a major decline over 4 or 5 days. But everything else seems to be working as it should as of the moment. So I am looking for these short-term 1-minute chart on the DIA right here in the middle of the top. That I think is going to hold and start to make higher highs for the day, I hope. And we're going to see follow through starting on Monday morning, I hope. This is the point in time where you begin to have or have had breakaway gaps, which is what you could call this morning's gap. But it happens to be right where another gap was the previous day. So now you call it an island bottom. This is looking great, guys, really. We are almost at the high of the day already in the QQQ. And now the QQQ is very close to making new highs that'll go all the way back to August. Great. And I want to backtrack a hair because I want to show you the DIA. It's going to freaking explode, I think. And I don't say that very often. I haven't said it in a long time. So if you can get above, and I do think it's going to 343.5, let's say 344 would do the trick. You're not only going to make new highs since December 13th, but you're extremely close to the highest high going all the way back to April, a year plus ago. So the DIA is close to a breakout of a trading range since December, and that's very close to a breakout of a year's worth of highs. So once you get above the December, January blocky trading range highs, and that level again is right around for the DIA at 343 and a third. Staying above that on a closing basis probably means you're going to blow through the top like a rocket, and it won't be an Elon Musk rocket. It'll be a good one. Okay, next. Little inside joke there, not actually inside. So I'm excited about this. I like what I see. We just can't fail. I don't want to see any significant decline. If there is a bit of a dip, it's got to hold and turn around and start to come right back again. Now, you do not have an island bottom in the QQQ. All it did was come down yesterday and close again, or attempt to, I think, a little bit more of a tiny gap that it left behind a couple of weeks ago or a week ago. So that's okay. And if you take the look at the bigger picture of these indexes, although the Spider, DIA, and the Qs tried to form head and shoulder bottoms starting back in June, summer of last year, all of them had a bullish engulfing ER buy signal on October 13th. That's a whopper of a signal. And I said so on the day. Go listen to my recording, October 13th on YouTube. Or maybe the day before. And the day after, certainly. Now, the neckline was broken on the Qs. Didn't have but a minor amount of problem at the neckline, and off it went. The minimum upside objective on this long-term head and shoulder bottom for the Qs is not at historic highs. The minimum objective is 347, pretty much exactly. And we are already around the second highest closing price for the trend since October 13th. If we clear, and it's very close, the high made only last week, then we'll be making new highs since August of 22. And that is not going to be very far away. By the way, I just got to mention here a couple of things before I get into futures, which you got a whole bunch of great stuff. We got a double top with bearish engulfing ER sell signals on both highs on the silver. I'll get to it in a minute. You won't see that again for a long time on any market. Okay, keep in mind the ER sell signal did give us a sell signal on the top on August 16th on the QQQ. Fantastic. The end of a major swing up during a bear market, as it turns out. We also got the low of the whole damn move on October 13th. And since. So that's an example of a sell signal and a buy signal that are going to be hard to beat. Now, in the future, starting next week, I believe, I'm going to have some examples of more precisely what I look for, why, and the graphic representation of the ER signal code coming up on the daily charts. I might show, I think I will, some examples on even the 1 minute charts of the trades, how we get in, well, where we got in, not necessarily how. This is available. You're going to have to pay a little, but I'm trying to convince you that it's extremely worth it. And I keep doing it and doing it and doing it. My style is obviously not what you hear from a lot of other well-meaning, shall I say, individuals. Now, I think I've said enough about the stock market indexes. Really excited about this. You can tell. Here comes futures. Of course, the S&P E-mini is a futures contract as well as a stock market index, so I have it in both groups. And I'll start out with it like I did in the indexes, ETFs. And we're up significantly today. We held approximately at a little support from a few days ago, a week and a half ago. The bonds and 10-year notes have been stuck between a rock and a hard spot. Resistance up on top has stopped it multiple times, and support below the market has stopped it also going down. The longer these trading ranges persist, the bigger the moves that occur after them, after it breaks out, and that's a guarantee it'll happen sooner or later. And this is a significant amount of time. You got November, December, January, February, March, April, now finally May. That's a half a year plus. That is, take it from me, a significant amount of time to be in a sideways trading range, 6 months plus. So I expect a heck of a move when it breaks out, and I do expect it to be up, and I've been saying so for months. No signal momentarily. I'm watching for a breakout. Next, bonds like 10-year notes are between a rock and a hard spot. The support in bonds is not quite as accurate as it was in the notes, but I like what I see here. Hang on a second. Got carried away. That was the S&P 500 originally. I was talking about support, bouncing back and forth. Everything I said still stands. Here's the bonds. Support still stands. I knew that, but it's not quite as accurate, like I said, as the E-mini or the 10-year. The resistance area is the most profound thing here. Breaking above that is going to be super bullish, and it's quite a bit of a same commentary trading range as the E-mini. Let's go to the 10-year notes now. There we are. Resistance stopped the last rally, which was yesterday. Now, yeah, I didn't get a sell signal, but I think we got overbought maybe in the bonds. No, we didn't. Sorry. And they didn't quite get as high either. So going back to the 10-year notes, resistance a little more accurately stopped it, and it's pulling back some. But the lows are getting higher slowly, and the highs are either the same or getting a tiny bit higher. And that's the definition of either a flat top right triangle or an upward, slightly upward slanting wedge. Both can be very bullish, especially the flat top formation. And it's exactly what I'm expecting, a breakout above that red zone for a super bullish breakout. Here we go with crude oil, which broke major support in the last couple of days, but it got oversold in the meantime. Remember, my yellow bars represent oversold conditions on the way down, but on the way up, like here, they represent overbought conditions. So yellow, like a traffic light, only means warning. And, you know, in other countries, they turn it yellow before it turns green sometimes. Around here, it's yellow only before it turns red. But anyway, We're up against resistance. We have been, still are, a little on the oversold levels, at least around the lows of the day today. And you might notice that the subgraph doesn't look quite like my typical Wells Wilder's typical relative strength index. I learned RSI from Wells Wilder himself. I started lecturing in the 1970s, and I've modified his RSI because I like it more than a little more than stochastics. I knew George Lane very well, and I like stochastics also. They're both oscillators. They're both momentum type of indicators. They're both very useful indicators. In fact, I think CNBC at one particular point said that stochastics was the most popular indicator used by the general trading public or investing public. Okay, now, oversold. We're going to get a bounce. We are getting a bounce today. Yesterday was the more oversold situation. We're up against a little resistance on the live, I'm at crude oil. But the trend is down, and we did poke a hole in the bottom slightly yesterday, making it easier, in my opinion, to break down and stay down and trend lower very soon. Next chart is heating oil. Same thing. Broke support slightly, but it did hold. We're getting a little bounce, and we were oversold. No surprise. In this particular case, I have a significant resistance line that used to be a support line until a few days ago. And they both used to be green, but I turned this one red because now it's resistance overhead. And guess what? We're right there right now. If you are interested in shorting, excuse me, heating oil, I think this could be a pretty decent price range to consider doing so. Always make sure you got a protective stop in, a stop loss order in. Never have any kind of a position on unless you have protective stops. You know, accidents happen. You're not right 100% of the time. Next, natural gas. Got oversold today for the first time in a while, but we've broken support lines. I don't expect this rally to go very far or last very long, and I'm looking for lower levels. Next, gold, silver, and platinum. This is important stuff. They're topping out. That's my opinion, obviously. We did catch the bottom of the market in all three with ER buy signals. In gold, it was February 28th. It's now got something like a broadening top, but not quite. You got a 1, you got a 2, you got a 3. We didn't really get much of a 4 at all. And 5 was yesterday. It's Tierra del Fuego from here, heading south from here, in my opinion. So I'm looking for a break below 1979 on a closing basis. And then, of course, below a little bit lower than that. And I would not be surprised to see in the weeks to come a test of the lows that we had back in February, March. But no signal at the moment. Next, silver has a double top formation with a bearish ER sell signal on both highs so far to the exact days. This is rare. It's great. It's a variety of reasons to believe that silver could be, should be, maybe topping out. Now, today isn't over yet, but we are significantly lower than yesterday's close, and we did get a lot lower than yesterday's lows, and it is a bearish ER sell signal point blank, period. The difference between these two highs is infinitesimally small. Like, I think I measured it 13 thousandths or 0.013 or something. So it's a double top. As long as we break out below the lows of 24.71 on a closing basis. But this is how it looks before it happens. Next chart. Oh, by the way, the minimum downside objective on this, just eyeballing it, would be very close to about 23.25. Yeah, and that corresponds with some support in general. Yeah, that makes sense. All right, next chart. Platinum. We had a sell signal already a few days ago. We had a retracement back into the range of the bearish engulfing 2 days later. We now have a new low for the move down yesterday and a new low close below all previous lows yesterday. And today's a little bit of a bounce. I don't care. There's nothing particularly important about this little bounce. Down moves don't close down lower every damn day in a row, and vice versa. We did catch the bottom of this market in platinum on February 27th. And now we're not at the top like the silver on a double top, like platinum did allow us to get very, very close to the high here. And these two highs also, which was at the time almost a double top, but it didn't work out quite that way in the end. Both were very profitable. And I'm referring to way back in September and October of 22. And it could, silver could end up being something like that, but we'll see. We'll see. That's not typical. Typical would be heading down. So now I've got sell signals in platinum, double top with double sell signals in silver, and a toppy looking formation in gold. Next, high grade copper. Bullish engulfing yesterday, a retracement today that allowed you to get in almost to yesterday's low, but not quite. So we're now higher than yesterday's close and higher than the entry point, unless you got in cheaper, which you could have. And in fact, looking closely at this daily data, the opening was below our bid. So we got in lower than the green dots, and we're even higher at the moment than the green dots. So the low today is exactly 3.825, and yesterday the low was 3.826. So we did not get stopped out. And you could have gotten in, if you were risky and gutsy, extremely close to almost a no-risk trade. And I hate to say that because it's a very misleading kind of a statement. But wow. Okay, I love it. Next chart. We had a buy signal in soybeans, and pay attention, the green group is showing some very bullish signs. Soybeans happen to be one of the least. We had a buy signal that didn't work very well, and that was just recently, April 28th. It came up the next day, okay, and the low of the day was almost exactly a little bit below our entry price. So you got in the next day with an ER3 trade at almost the low of the day. Don't try that at home alone. So it worked out extremely well, and that was the date of May 1st. The next day it went up some more, but it did have a bearish engulfing. I mentioned at the time I was a little concerned about that, and it did make a low lower than the bottom of the bullish engulfing, which was only 3 days earlier. So the actual signal didn't really work, period. You would have lost for an ER3 trade, for example, probably a little money, but it wasn't bad. 10 cents at the worst, it looks like. Probably about 10, 12 cents at the worst. Soybeans, right. Okay, so now we're approaching a new high and a new high close. And if that's the case, which it looks like it will be, the buy signal was part of the bottoming out process and not the lowest low. And I built them to be the highest high for the rallies and the lowest low for the breaks, if not the top and the bottom for major long-term turning points, which obviously doesn't happen very often. The ones that happen often are the ones that don't last particularly long, but provide some very good trading potential. So this is okay, but it wasn't a great signal. And I am bullish for obvious reasons and looking for higher levels. I expect 1456, 1470s soon. Next, we have bean oil, a buy signal 2 days ago. It basically did not much yesterday, the day after the signal, and came extremely close to the ER3 entry. Please remember, ER1 is always in the trade the moment it turns green or red. So whenever you see a green or red daily bar, you know an ER1 trade, bullish or bearish, took place and may still be on the books. In this particular case, the market's taken off today, 2 days after the signal. Great. It is popping up extremely well. We didn't get the bottom of the bear move like we did on December 12th of 22, a while back, and a couple signals in the interim that weren't particularly great. That one was okay for a day or two. This one really didn't work at all. But this one's starting out to be very, very good in soybean oil, and I'm looking for a move up somewhere around 57 and very probably above that. Next, Soybean meal. Remember, I make adjustments every day on this recording. What am I saying? Yeah. You should listen to it every day. So soybean meal is oversold. It's probably going to rally. The other grains look like they're going to rally some more. Why not? You got a little divergence, a new low in price, but not a new low in the indicator. The indicator was oversold both times, but this is a setup for a divergence signal. And I'm expecting something like 440 to 50, the low 50s for soybean meal. Next chart is corn. And we did so far get the bottom. And that was 2 days ago. And the low of the day yesterday was just a little bit below our official ER3 entry price. So ER3 is also long. So ER1 and ER3, probably I can almost guarantee ER3 is doing extremely well. It took off and was profitable in the close yesterday and was never lower on the day, maybe a tick or two earlier, and just took off right away today. This is a new high for the last 5 days, a new high close for the last 6 days, and we're on our way. What can I say? And that rhymed accidentally. Next chart is wheat. We got the bottom. Come on. 2 days ago, we had a bullish engulfing ER buy signal. Yesterday, it missed by a hair ER3, but ER1 was doing great in the first place. And we're up to new high closes for, I would say, 6, 7, 8 days maybe today. It's not overbought. We're not even close. I think we're going to go up very quickly to 676 and very possibly up back up to that resistance area. I'll extend this to the right. Well, I could do it right now. 8.58. And drop it right about where I got it before. That's about it. To this resistance area. So I think that was going to be challenged. That's a little too high. And soon, maybe as quickly as next week. But bull markets go up a little slower than bear markets go down. And by the way, guys, that is not necessarily as true in commodities as it is in stocks. That's an old stock market adage. I was a commodity broker for 30 plus years. I had a stockbroker's license for a few years, hedge fund manager, forex trading firm president, blah, 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 whole stuff, variety of stuff. So I'm looking forward to more rally in wheat. That is the grain complex right there. Live cattle. I don't know. It's out to pasture, a little bit bearish, and it might slip off a little bit more. But the trend is your friend, and it's up. So I probably will get a little bit more weakness, test a little bit more of the support area. It was tested very accurately 2 days ago. Look at how accurately it came back to some previous highs that were way back on March 6th. When that was broken, we got a sell signal that didn't work very well, just for a day or two, but there's some money in that. The ER signals were originally developed for short-term swing trading. Scalping is in and out the same day. Day trading, scalping, same thing. Swing trading, you're in for 24 hours or maybe a few days or a week, and some people might stretch it off for 2 weeks. But after that, you're really kind of getting into investor analysis and investor mindset and thought process. That's not where I'm coming from. I'm coming from the swing trading and scalping genre. So started out as a commodity broker in 1972. Next in the industry is 71 as a runner on the Board of Trade and Mercantile Exchange in Chicago. We're going down hard in hogs. So if I'm basically bullish, which I am in cattle, maybe the hog market will pull down the cattle for a little bit or push it back up straight up. I don't know, but that's wheat. Went the wrong direction. Hogs are looking very weak. They're very close to previous lows. They are not oversold. It looks like they're going to make a new low and drop off again for another stair step down, which is exactly what bull markets and bear markets do. They zigzag back and forth. Some people call them Elliott wave. As a matter of fact, Bob Prechter, the Elliott wave theorist, was a client of mine. Okay, I'll stop there. So live hogs. Next is OJ. Sideways, boring, waiting for some signal, some guidance. Next is Coco, same kind of comment, and yeah, they're in bull trends, no doubt. So trade with the trend. Next, sugar, same comment precisely. And we are back to the E-mini. It's Friday, TGIF. You have a great weekend. I'm excited about next week.